On today's hot sheet, I'm discussing housing inventory data for the past week, Fannie Mae's home purchase sentiment index, and the top city to city migration trends in 2025. Today is Monday, August 11, 25. I am Byron Lazine, and the hot sheet starts now. Live from Naples, Florida. Welcome into the hot sheet here as we kick off a new, fresh week. Less than 5 months to go into the year. We are moving through August all of a sudden. The dog days of summer, they're coming to an end down here. School's starting for some today. So it's that time of year, whether you're Northeast or somewhere else in the country, and school maybe starts after Labor Day, but it's between now and then. So that'll create a little bit of a slow down to some degree over the next couple of weeks in the market. Certainly those with families are focused on that. How much is it going to impact things like inventory? We get into it every single Monday. It's the only live show on the internet Monday through Thursday when the markets are open that deals with housing directly for housing professionals. It's the hot sheet. The free and simple way to support this show is just subscribe to the YouTube channel. It's free. It's simple. Hit the notification bell. Obviously, let me know where you're tuning in from. Before we get into inventory, as we do each and every single week, I thought it might be useful to just mention some of the news over the weekend, which was it was interesting. Don't know if it'll actually happen. But the news over the weekend was that you could see Fannie and Freddy go private sooner than later, fully private. Next step towards privatization seems like it is happening. Trump made some real news here over the weekend, President Trump, on Fannie and Freddy. I call it another step towards privatization. There's been some steps already this year that have alluded to that. You've seen Fannie and Freddie stock both take off since inauguration day. And even leading up to that, since the election was won, you saw Fannie and Freddie stock both take off with this investor mindset that, yeah, they will be private under this administration. The administration is preparing to sell around $30 billion in Fannie Mae and Freddie Mac stock. This is according to Wall Street Journal. This would involve selling between 5% and 15% of their stock to the public. Then there was news later on in the weekend that not only is this what the administration is preparing to do, but that the administration has let me see if I can find it here. I saw it. I don't have it pulled up, but the administration is preparing a stock ticker already for, here it is. This was posted to the Truth Social of President Trump. Wants to list MAGA as the stock ticker for Fannie and Freddie and create new name, the Great American Mortgage Corporation. So looks like Fannie Freddie could be going public or private as opposed to, a conservatorship, which is what it is in right now under the government. Would, under that scenario, these are unanswered questions, would that still be the backstop for the U.S. mortgage industry, right? Would the government still be the backstop? Ultimately, you got to imagine if this thing goes private and something hit the fan, that they're going to step in, right? But those are unanswered questions, and we'll see. What we do have answers to is the inventory for active single-family homes over the past week, okay? We had an interesting week. We had our year-to-date now, a week of year-to-date lows on the 30-year fixed, okay? So year-to-date lows, we had 5 straight days of really that year-to-date low, 657, 658, 657, 655, 657. there's belief that as rates go down, transactions could ramp up. Well, if transactions are ramping up with rates going down, it's been 1 week. That's a very small sample size. It's like having just a half a spoonful of caviar versus, sitting down for the main course. We don't have enough data here to know if these rates, and as they get closer to 6%, what will that mean for historically low levels of transactions? The guess is they're going to move up. It's going to free up some sellers into the market. Well, is it also going to free up some inventory? If it frees up sellers, does that mean it'll free up inventory? Well, week one of year-to-date and 10-month low interest rates, it did the opposite. Inventory fell. So does that mean transactions are going up? We'll take a look at that as well. But inventory moved from 865,000 plus to 859,000. When we look at the last couple of years, this is a time of year, first week of August, that we would have anticipated if we're making, a bet. If we're going to the Baccarat table and flipping the coin, I'm going to flip the coin on the side that suggested inventory would have increased this week. At the very least, I would have played the 8-1 tie. If you know Baccarat, there's an 8-1 tie bet you can make. And I would have said flat before I said that inventory would have went down. So a little bit of a surprise, not a huge deal. This is 1 week of data. We'll match this up as we move forward into next week and see if this is becoming a trend. But inventory growth, the growth rate has certainly slowed down. It has been slowing down since June. I mean, just if you're watching and you can look at the screen, you can see the flattening out of the growth rate, as opposed to obviously April and May, where you expect growth on inventory to accelerate. Now, last year was interesting because growth continued to accelerate, that rate of growth, all the way through to October. We haven't seen that. We've seen more of a 2019 trend where inventory starts to flatten out come late summer, and then early fall is what happened in 2019. You'll see that inventory starts that seasonal decline. We didn't start that seasonal decline until almost November last year, early November, on the seasonal decline of inventory. We're sitting currently right now at 24% more than last year. We were up at the peak difference on inventory year over year, up over 30% at one point this year. So the gap between last year and this year is shrinking, still substantial, 24%. Last year at this time, 692,000 active single-family homes in the market. We're at just shy of 860,000 as we're here today. These are above 2019 low levels. It is a healthier place than we've been since any point, dating back to 2019 on inventory. But it is something to watch for, that we're seeing some sellers say, I'm not going on the market just yet, or I'm pulling my house off the market. I'm not satisfied with the results. Maybe I'll wait till rates get lower and buyers can put more on the table in terms of their offer. So interesting there. Single family new listings, another reason we didn't see inventory growth this past week. Look at the same week for last year. It was an outlier week, yes, but it was 75,000 plus in 2024, the first week in August. This year's first week in August, 66,000 on new listings. So we did not get a new listing surge on 1 week of data with the year-to-date low rates. Something just to understand, keep at the back of our mind as we move forward. The sellers who are actively on the market are reducing that price at a faster rate, at a more rapid rate than we've seen in any of the last 3 years. Sellers who are on the market, who want to see an offer come in, are reducing their price more than any other seller the last 3 years. We're at 41.8% on percent of properties with price reductions here. as of right now. It's the highest level of the year. Last year was 39%. So maybe there are some sellers. I'm not going to go on the market and play that game. I'm going to quit on 25, see where we end up on rates come the end of 25, and maybe reintroduce the thought of selling in 2026. Okay. Here's what's impact. Here's where we're at on pending sales. Total pending sales coming in at 374,000 versus the 376,000 at this point last year. Really just chugging along the trend line of last year. We're at, again, historical existing home sales for the sales near lows. Okay. So pending home sales for the week was actually down. So we didn't see, the inventory kind of go down because pending home sales popped. That's not the correlation here for the week. 66,000 on weekly pending sales. It's down week over week, and it's down year over year for the same week last year. You look at that data to look at like, okay, what's the forward sales going to look like? There's not a good indication that we're going to get out of that historically low level on existing home sales. The only good indication that we could get there, if rates continue to move down, it might start impacting those pendings and future closings. You keep seeing this mortgage purchase application here now for 14 consecutive weeks as double-digit growth year over year and 27 straight weeks of positive year over year data. So that would be the one future looks bright silver lining as we look into the future of what pending home sale and ultimately sales growth could look like. All right. There you go on inventory. Certainly let me know what you're seeing in your market. Fannie Mae put out their national housing survey here. And we want to look at these surveys as they come in. How are consumers thinking about this market, right? A lot of economic stuff is a feel. It's confidence. It's what, if I'm confident to go ahead and make that purchase and more people are thinking like me, it's going to have an impact on the economy. The home purchase index here from Fannie Mae distills information about consumers' home purchase sentiment. So this could be a future indicator for housing from Fannie Mae's National Housing Survey. It breaks that down into a single number. And let's just see if we went up or down here on the home purchase index. Okay, so for the July number, we're coming in at 71.8 off of a 69.8 in June, well off of these high levels we saw during even, we're under 13. Think about 2013, a long time ago. If you were in the business then, you remember 2013 was not a great market. It was just like the first, starting to catch our breath from the recovery. Confidence went up. Okay, we're out of those 2009 to 2012 torture chamber years. It did drop at the end of 2013 back to 2012 levels, but regardless, we're well below any of those 2013 all the way to COVID levels. Home purchase index, in 21, in real time in 2020 and 21 wasn't all that great. It should have been through the roof. Hindsight 2020, looking back at 2020, man, 2020 should have been a 100 on home purchase sentiment. You had the low rates and you had deals in the market. Okay, peak 22, spring of 22, it was obvious that those that bought in 2020 and early 20, they were first movers. They took advantage, low rates, got great deals. But at the time, remember, people didn't feel that way. The sentiment was uncertain. The sentiment around the time during COVID was, I don't know what the heck's going on, so I don't know what to think about anything. Obviously, as rates went up, we saw our lowest level on the Fannie Mae home purchase sentiment that we've seen over the past 15 years, and we're still recovering over the last 3 years from that low drop. Currently, right now, month over month increase to 71.8 from 69.8 on this Fannie Mae housing index. So there's one number for you. I've got a couple other just lists here as we kick off the week to look at. Let me just see if there's anything else I wanted to break down on this survey that'll be useful. You can find everything that we put out for the hot sheet right in school for BAMX members. Go to school.com/BAMX. You want to get access to it. All the slides that I use each and every single day end up here. There's your graph over time on the home purchase sentiment. So we are recovering through these high interest rate years, through the real estate recession. This is your real estate recession years here on the right, from the low 60s now to the almost mid 70s. And here's some other conditions from the report before we move on to a couple of the lists that I have. Buying conditions, 23% say it's a good time. 77% say it's a bad time. The net change here, month over month, down 10, year over year, up 11. So net good time to buy, negative 53%. Again, month over month, the buying conditions have moved down. But year over year, they've moved up. Selling conditions, 60% say it's a good time, 39% say it's a bad time. So that's going to be geographically dependent. Net good time to sell, 21%. Year over year, that's down 10 points. Home price outlook, the net number between the two, 46% going up, 18% go down. Net numbers, 28% going up. Both of these numbers are up on home prices. So the consumer consensus is home prices going up +5, +7. I always like to look at that number, home price outlook. And if I'm talking to a buyer, do you think prices are going to go down? Well, your competitor buyers don't think it is. Okay. Like the other buyers, the ones that you're going to be competing with essentially to, get your offer accepted, think home prices are going up. So their offers might reflect that. And it's just an idea we would want to keep in mind as we move forward. Mortgage rate outlook, 28% believe mortgage rates go down, 32% believe it's going to go up. So pretty much split down the middle there. Net change month over month +5 and year over year down 1 point. So a lot of 50-50 coin flip Baccarat style mindsets on mortgage rate outlook. Job loss concern, 75% not concerned. Month over month, we're up 9 on this, and year over year down 6. So not a lot of movement on job loss concerns from home purchase sentiment. Again, jobs have been a big topic of where the economy might be heading since that big jobs report just a couple of weeks ago. Change in household income, 18% significantly higher, 10% significantly lower. That's ultimately unchanged. When you're inside a school and you want to grab this, and maybe you want to highlight, hey, how other buyers are looking at, and send this off to a buyer on a one-on-one communication, or create content in your newsletter or something else. When you're inside a school, just go ahead and download the little button right up here on the right, and you can grab that and use any of this data, obviously, that we're putting in here for all of you. The good time, bad time respondents, maybe this one's easier for your customers to be able to understand. We have it broken down, obviously, on all the line charts here for you. All of those metrics that we just went over, they're all inside of school for BAMX members. All right, couple other lists here. U.S. News put out their city-to-city migration paths. They put out their top 50. I'll introduce the top 10 here. City to city most popular migration paths. These aren't state migration numbers, okay? Remember, for 5 years, all we heard is everybody's moving to Florida. Everybody's moving to Texas. Everybody didn't move to Florida. Everybody didn't move to Texas. That was never going to happen. That was kind of ludicrous to believe that everybody's moving anywhere. Listen, I moved to Florida. I love it. Still have my place in the Northeast. I love that too. But not everybody moves down here and loves it. I know a lot of people that have moved down here and moved back to wherever they went. There's certainly a migration pattern happening to the Sun Belt states, and the national home builders are ready for that. They're more than ready. They've overbuilt in a lot of these areas, preparing, I guess, deep into the future. But now we're just going to look at city to city. So this list that we're going to take a look at, these are the most popular city to city migration trends happening for the year. So 1 and 2 cancel each other out. New York City to LA, LA to New York City. Makes sense. Okay. Two of the big cities, the two major cities in the US. If you're going to rank the top 4, I see this on like a trend on social now. What are the top 4? Say everybody goes New York, LA, and there's like debate. Well, is it Chicago? Is it, San Francisco? Is it Miami? I think Vegas now is to me going into that top 4. Miami, I think, is super international. I think Chicago maybe is sitting outside the top 4, but a lot of people would argue with me on that. And you don't see Chicago. You do see Chicago a couple times on this list. You don't see Vegas on this list at all. So I'm probably wrong in the way I think about it. West Des Moines, Iowa to Phoenix, Arizona is number 3 on the list. Interesting. San Francisco to New York City, Charlotte, North Carolina to Chicago, San Francisco to Austin, New York City to San Francisco, Chicago to New York City all over the place. Most populated city, obviously, in America. It's the most recognizable city in the world. San Francisco to Seattle, New York City to Chicago. So there's your top 10 migration patterns per U.S. News. I'll introduce just a couple more, and you see how much Chicago shows up on this list. Chicago to L.A., Chicago to Houston, L.A. to Dallas, New York City to Miami, Houston to Austin, Chicago to Denver, L.A. to Vegas. So now Vegas now on the list here. Seattle to New York, L.A. to Miami, L.A. to Austin. All right. There's your top 20 migration patterns. Good information. I hear agents ask that, like, hey, what are your big feeder markets? I think having data to back up what the big feeder markets are instead of a feel for what the feeder markets are, because your particular business might not reflect the reality. And so understanding that data, it's just an interesting chart there. Some numbers here that are happening in the market. And here's 10 more cities on a list. Top 10 housing markets for cash offers over the past week. So Zudilio gives us this data every single week, as obviously friends of the hot sheet. Support the hot sheet, support all of our BAMX members by giving their platform inclusive into the BAMX subscription for everybody. But they've got really good, fresh data. And I ask them for this data each and every single week so I can take a look at it. Like, where's the cash flowing to? Here's the top 10 housing markets for cash offers right now. It's Denver, Vegas, San Diego, Phoenix, Marietta, Georgia, Atlanta, Georgia, Jacksonville, LA, Raleigh, and Dallas sneaks into the top 10. Vegas on the list a lot. I see the future of Vegas being very bright, not because of the sun, but because of the investment that's happening there from a professional team standpoint. There's a lot more than just, blackjack and my favorite word of the day, baccarat. But Vegas continues to pop up on that top 10 list. Start the week here today. We've got a 10-year that is up just a little bit. I know it's showing down here in the early part of the day, basically flat, but up just a little bit from where we started 5 days ago. Okay. So for the last week, we've creeped up. We're still under 4.3. We're at 4.275. But this could be, you saw the stock market move up today. There's going to be some key inflation data this week. For whatever reason, investors are pouring into equities here to start the week. And that's creating maybe the 10-year to start the week a little bit higher than we were last week. Obviously, the 10-year and the 30-year do their dance together. So what will that mean for the 30-year later here today? We'll have to wait and see. But 6.57 is where we ended the week, and it's where we start this one. The 30-year fixed weekly on MBA was 6.77, and the Freddie Mac 30-year fixed weekly was 6.63. Right now, Polymarket CME Group still both calling for a cut here in September. CME says 86% chance that there will be an ease of the federal funds target rate come September. Okay. Something big happening this week that love to make sure you're aware of. You can do what you will with it, but love for you to, take a look at this and consider. It's somebody who's been a friend of BAM. Obviously, he was one of the speakers at BAM Fest. Our board member, Sharon, is obviously part of the company. Sharon Srivatsa, board member at BAM. And there's something really big happening in their world today. I'm talking about Alex Hormozi, or this week. And it's the $100 million Money Models book. I've read both of the first two books, and they're exceptional. What a great title here. The book is so good, it should be illegal. I maybe would go ahead and steal that for your next listing. This coming soon is so good, it should be illegal. You want to get some attention in the market. That's been tested out there with millions of dollars now on an ad campaign. And I'm pretty certain it's pretty effective. But anyways, I got a link here down below. If it's something you're interested in, love for you to sign up using this link. This is a free event, the book launch, which is August 16th. Mean a lot to me and Eric. If you are going to attend the event, that you claim your free pass using this link. We're trying to support them. They've supported BAM. And so just wanted to introduce that to you. If you're interested, Haley, if you could drop that link. It's in the show notes, Haley, if you're looking for it. If you could drop that link into the live chat and obviously put it up on the replay for those that are interested. We'll make sure that link gets up. I don't, Haley's getting it. Thank you, Haley. I was worried that maybe, you had a long weekend, Haley, and you were taking a little snooze here. And I hope I didn't make you snooze out there. So if you're interested, $100 million Money Models, it's happening this weekend, live Saturday, noon Eastern, 9 a.m. Pacific time. Myself and Eric will be on there. Sharon will be on there. It'll be something love to see more band members on. And I don't know where Haley is with that link, but we are going to put this link up, Haley. It's going to get up there. Let me just check and see if it's on Eric's page. Should be on the Broke Agent on Instagram. Haley, it's right in the show notes on the sheet, the Google sheet. Let's see if Eric has this posted up. It'll be in school members. All right, I'm going to see if I can get it over here on this comment for you guys. No, I can't because of there it is. Haley's got it up. There's the link. Okay. So we've got the link up for you guys. If you're interested in that, grab that link. Obviously, BAMX members, it'll be inside of school for you. If you want to join school.com/BAMX. All right, there you go. There's your hot sheet for the week. Thanks for hanging in with me there at the end as we got that link up. Haley, make sure that link is on the replay, please, for anybody who's looking for that. Have a great start to your week. I will see you guys back here tomorrow. Until then, toodaloo.